Hi, and welcome again to another edition of Market Analysis for today, December the 2nd, 2024. This is a recording previous to the USA Open for Vantage Markets, and I'm Giovanni Betancourt. All right, so let's take a look at what we can come and speculate for this month. We obviously have had a good rally in the equities, and in this daily chart we see how the month began with a green day, a recuperation day of November. Obviously, from here the market has rallied and created a new all-time high. It retraced right about 80% of that, and from here it has continue its trajectory to the upside. But if you take a close look at this particular candle, which is on Friday the 15th, in the middle of the month, it was a pretty long candle, red candle, and the market has taken 1, 2, 3, 4, 5, 6, and 7, 8, 9, 10. It's still today really just basically at the range, within the range of this candle. If we take a look at with the wick and the real body, the whole trading range is right about there. Okay, so we say I say 11 because obviously this wick fluctuated into the real body of this candle. So what can you come and take from here? One thing that I take from here is that on just in one day the market dropped from, it opened at 20,970 and it went down to 20,403. So basically that's 500 points, 550, 570 points that it dropped, and it has taken the market 10 days, 11 days to recuperate that, or to trade back into that. So that tells me there is a big battle between bears and bulls, buyers and sellers, okay, where basically they're kind of tied. If you will say, okay, no, well, the buyers are really just on the plus side, yes, because obviously we have had higher highs and whatnot, but it hasn't been that much of momentum or volume for the market to recuperate. It took the market 10 days. Okay, so right now basically, so right now we, as we speak, we are outside of that range where the market began to fluctuate. But still, we have another red candle before that. But anyhow, what this could tell me is that since we are facing right now what the market is in this particular time frame, we are facing that the market is making an ascending triangle. Okay, let's take this from here and I just use the wicks. All right, so an ascending triangle, we're seeing how this market is just looking for direction, right? It's just looking for direction. So basically what I see from all of this is that when an ascending triangle obviously shows us that the market has been moving higher, but not that strong enough. And about 71% of the time, this type of triangles actually do the opposite. Now, about 11 to 13% of the time, they do continue with the direction of the trend, which is upwards, but they do have obviously those periods that is more of a downward trajectory. But so far, in this particular example, we are in that about 13% that the market has broken out of this range or out of this resistance, because it has created a resistance right around 21,000, which is a psychological round number. So we have done that. Let's go down to about 30 minutes and just to take a look at how the fluctuation of the market is so far. Okay. All right. So if you take a look, this is the line that we had drawn, right? So that's the resistance level. The market has just bounced off of that, rebounded off of it, retraced towards the 50-day moving average. The bounce has really just narrowed. So volatility is null, has broken out, and so far we are fluctuating above that particular case. Now, at this moment, we could come in and speculate that the market is doing what's called a throwback, or beginning to obviously break that resistance level. And let's see if we'll do a throwback, which is breaking that resistance now, support, and throwing it back to that support now, and then taking that trajectory to the upside. Or basically this could be just an attempt at taking out some buyers, bringing more people in, and then the market tanking. It could be a fake out. So let's see what will happen in this market for today. Now, one thing that we can come and speculate or try to use to figure out where we could find some level of support and resistances. Obviously, those psychological numbers are there, but we could also come in and just basically do a pivot point. Okay. Now those pivot points, we can come in and use the very first day of the month, which is today, or the previous day, or you could do a week, or it all depends on how you want to do it. But let's just use Friday's close as to find the typical price, which is also the pivot point. And what we want to do, we want to be able to add basically the high 21,015 plus the low 20,804 plus the close 20,099 divided by 3. So you get 20,936. 20,936. This is a pivot point right around here. Okay, which is basically where the market retraced today towards that level. And from here, the market, we can come in. So let's use that. 36. Okay. And let's choose a different color for this puppy. Let's see if we can use the yellow, or let's use this one. Okay, so from here, you can come in and say, okay, so the pivot point, so the market will look to fluctuate towards it when it's above or below, and when it's below the market, it can be used as a probable level of support, and when it's above the market, it could be a level of resistance, right? So from here, if you want to use the Fibonacci extension tools to figure out how much more of this run can we expect for it to be extended, well, we come in and use the 10-base fib extension. Let's use the same candle that we use to measure, to identify that ascending triangle. Let's use that. So from this low to the high and back down over here. Okay, let's just now need to add the the levels, the coordinates style. Okay, here we go. So let's use the 6.18 and the 0.38 and the 0.23. So that's the extension, and yeah, and I mean the 100%, but that's fine just with these ones. All right, so here we can then come in and use the Fibonacci numbers, right? Which is 0.23, 0.68, 0.23, 0.38, and 0.618, which is the golden ratio. And then use those as our power level of resistances. So we happen to have placed already this one at that level. You see where the here where the extension, the 38.20% in this case, is right on top of this line. That's our first level of resistance, and then we could come in and lower that second level of resistance to the golden ratio of 61.8, but it's actually 0.618, the golden ratio. Okay, so we could do that, and that's how we can use that for our level of resistance, right? And for the level of support, we could probably come in and just do a retracement, but we don't have that much of data to do a retracement. Let's see if we can do it from here to here, to the top. And we also add the Fibonacci extensions, and therefore you can use those numbers. So you can use the 0.38 as the power level of support, first level of support, and then the golden ratio, which the golden ratio happens to give us yesterday's low. So that could be a great point. So let's just use 0.38 and that low, Friday's low, which happen to be Fibonacci, the golden ratio. Okay, and there we have our power levels of resistance and support, and you can do this for all of the other assets. All right, so let's get moving and let's talk about the other assets. Then we have the S&P. So what can we expect? Oh, the S&P 6100 is not far-fetched, so let's use that right around there. And since we are in new territory, just use round numbers, psychological round numbers. So let's just use 60, 80 as a probable level of resistance, support 6,020, or Friday's low, same well, where we can use the tool, but and then the second one will be 6,000. There we have for the S&P, the Dow. So the Dow, we also just basically, we're gonna be making a new all-time high. So let's move our first resistance to the upper Bollinger Band. Let's use 45 to 50-ish as our first level of resistance. Let's use this double bottom with this fluctuation around here as a probable first level of support, and then this lower wick as our second one. So there we have our levels of resistance support. Now the direction of the market, I assume that we can continue to be bullish. It is going to be the Santa Claus rally mode. So we're going to be having that rally for the assets, for the indices. Something different for the commodities, but at least for stocks, we are looking for that Santa Claus rally. Now, as far as crude oil, I'm going to lower my support to 67.50. I'm going to leave this level of second level of support and the same level of resistances that we have had since last week, since we haven't met them. Basically, on Friday we did touch that one, but overall, I'm still bullish. Nat Gas, okay, so Nat Gas has traded down with a gap down. That direction obviously implies a continuation to the downside. So let's just lower our second level of support to 270, and that could probably be nice figure, and just use a shire, a 2.82 for our second support for Nat Gas. Gold. So look at gold. Gold is in just basically ranging, sideways trading. A breakout is about to happen. It kind of did a fake out to the downside. It rebounded off that level of support of 2,620. So let's see if it'll continue. If it'll just stay here, or will it do it? I'm gonna leave the same levels. We're looking to obviously continue to buy, being long crude gold, silver. So silver fluctuated towards $30 today, and it has recovered, looking to recover at least. So let's see if the momentum will help it and push it higher back to almost 31. Copper has had a pretty just basically sideways ranging, just sideways trading. This trading range is just very compacted. Okay, so a breakout is imminent. I mean, it did try to break out to the downside, but it found some support at $4. So we can speculate, a sooner a breakout soon. When, I don't know. But which direction would it break out? Towards the downside, towards the upwards? Well, it is Christmas, right? I mean, obviously we're going to be shifting to new year. More demand is going to be picking up. So this could probably just be better positioning for a lot of traders, futures traders indeed. So I'm still bullish in the overall market in reality. Then we have here Mr. Bitcoin. So 100,000 is not if but when. So we are overbought. We are fluctuating to the downside. So, but a Bitcoin still is gonna be happening at 100,000. Now, what will happen when it reaches 100,000? That's yet to be seen. So, since we are here in the euro, we need to change our level of resistances. This candle opened with a gap down, because this candle opened close up here. So it opened with a gap down, so pressure is being put on the euro. So 104.5 is going to be our first level of support, and let's just use 104 round number, psychological round number is going to be that place. But let's see if you revisit this low made on the 22nd. So far, yeah, selling the currency, the euro. Then we have the pound. Also open up with a gap down, is looking to fluctuate to the downside. Let's see if it'll sustain itself. I'm gonna bring up the level of support right to this 2 weeks that are almost in pair. So, and I'm going to use this level for support, and they will continue to push lower if we see that the dollar index recuperates and fluctuates above 106.5. If that happens, then we'll see more pressure on the metals also, but mostly on the currencies. That's it for today. Have a great trading day, and I'll see you tomorrow.